Well, hello everybody and welcome to the Social Media Property Show. Now we have a very special show in store for you this evening. So tonight we're going to cover mortgage lending and changes. We're also going to look at sales and market trends. We're going to tackle property investment and the rental market, and then we're going to have a little look at what's going to come up in 2021. Now, as you can see to my right, I couldn't be joined by a more handsome group of gentlemen, could I? Getting to you early last there. To my right, I've got Mike Robson here. Mike, how are you?
Very well, thank you.
Fantastic. Now, Mike, you've got a fair bit of experience, haven't you, in the property game?
Yep, 15 years deep as a landlord, investor and property manager.
Excellent, excellent. Oh, I've also got Dave Howell for me, Dave, independent financial advisor. Is that how you like to be titled?
Financial advisor, mortgage broker. I'm not too fussy indeed.
Wizard.
Mortgage
wizard.
Mortgage wizard. And mortgage broker extraordinaire.
Had we known that, we'd have got you a nice hat.
Oh, thanks. Yeah, suit me. Hide the grey hair, I think, wouldn't it?
And on the far right, we've got Ian Macbeth. Ian, how are you?
Nicely linked with the grey head.
Sorry.
Yeah, very good. 17 years in the property industry and looking forward to the show. Me and Mike are obviously the guys in the industry at the moment that are trying to disrupt things and trying to change it. So thanks everyone for watching.
Well, it's certainly good to see. And if you are watching this, please do like, comment and share. We do have somebody monitoring the comments, so we can see and we will respond as well. So if you have a question at any point this evening, please do comment and we'll get back to you as soon as we possibly can. Hopefully straight away, chaps.
Indeed.
Right, let's get into it, shall we? We're going to have a little look at mortgage lending changes first. So I suppose this is a question for you, Dave.
Absolutely. So, God, what's been going on? It's been an absolutely frantic, crazy year, to be honest. Start of the year, started off well. COVID hit, lockdown, we dropped off a little bit.
Yeah.
But as soon as the agents opened their doors again, it was busy, very, very busy. And then the stamp duty holiday was announced, and it's been frantic. Probably at least a third busier than ever before at the moment. That obviously has an impact on the time frames involved in getting a mortgage. So we're busy as brokerages. The banks are absolutely flat out. Surveyors, conveyancers, everybody's frantic at the moment. So although I'd say it's still a great time to arrange a mortgage, you have to manage people's expectations as to how long that's going to take a little bit more now.
So what sort of lead times are we looking at now? And I know from experience having bought this year, everything is taking longer. So what's the proportion of length compared to how it used to be, say, in the height of season?
So pre-lockdown, I'd like to have said we try and get a mortgage offer out between 10 days, 2 weeks at the most. It's easily double that now.
Right.
Some lenders are taking 21 working days to actually review an application. So that's a month before they look at the paperwork. Then surveyors are taking maybe 3 weeks to get a valuation booked in. Providing all that goes okay, you get a mortgage offer. So it can be 6-7 weeks. More commonly 4 to 5 weeks, I would have said, at the moment.
So a question for you then, with regards to mortgage offers. You've got your mortgage offer, fantastic. Now we know it has a timestamp, doesn't it? It will expire.
Yeah.
Has that now been extended?
Not really, not as standard. 6 months would be your typical offer date, expiry date. In some exceptional circumstances, certainly as soon as we came out of lockdown, banks did realise because there was such a delay and people who were offered pre-lockdown, nothing had happened for that period of time.
Yeah.
So they were getting extended then. But
Okay.
now offers produced today, not really getting extended that much. But we're talking once the offer's issued, it's then over to the conveyancer and they've got 6 months to complete. So it's still a fair time for them.
And they should be able to get done in that time.
Fingers crossed.
Fingers crossed.
Just a point on that actually, Dave, that I'll ask, because a lot of the buyers out there think 4 to 5 weeks from the point of going, yeah, I found a property, but there's a lot of work that actually happens before that, because we're talking application to offer, aren't we, for 4 to 5 weeks. So that's the bit where it gets quite tricky. So because of the stamp duty threshold, it's important that people realise there is a countdown clock at the moment, and actually getting in earlier with a mortgage, not application but in principle, talking to a broker is vital for us as estate agents, because a lot of buyers think it can happen almost overnight, whereas like you said, 3 week delay, maybe even on talking to your own bank to just get mortgage in principle stage.
Unbelievable.
Which is crazy.
It's unbelievable. And that's a really good point, because we would like to talk to people even before they've started viewing properties. And it makes sense. You need to know how much you can borrow to go and look at that value of property. So we would assess somebody, give them an idea of how much they can borrow, then go ahead and do that decision in principle for them. I mean, really, that whole process, getting paperwork to us and things, that could take a couple of weeks. So, great point. You want to start early before you start looking, really.
Yeah, perfect.
Okay, interesting stuff. Well, look, interest rates, and let's talk about interest rates.
Oh, hot topic. There's two sides to a very, very clear divide on interest rates at the moment. At the lower loan to values, so let's say sub 70%, you can still get some cracking interest rates, some really, really good deals. I'm not going to sort of state rates, but they're very, very keen, almost at pre-lockdown levels. Then as soon as you get up above, certainly above the 80% loan to value market, it's very expensive. Different opinions on that, whether it's a risk thing because banks are concerned about a reduction in the property values next year, or a volume thing because banks are so busy, they're trying to slow that flow of business.
Yeah.
But I mean, certainly in the last 5 years, I've very rarely seen 80-85% interest rates at the level they are now. They're very, very expensive. So that affects first-time buyers. People, there are very, very few choices for a 10% deposit mortgage now, 90% loan to value. And even those with a 15% are getting stung for pretty high rates. So I do feel sorry for those first-time buyers trying to get on the ladder there. But home movers, people upsizing property, got equity to put towards the new purchase, got a lower loan to value, you can still get some really good deals, really, really good deals there.
So your advice essentially is if you are thinking of moving, buying, etc., still do it.
Absolutely, I wouldn't say stop, no. And I think that's where my advice is sort of aligned with the type of mortgage you get. If you're in that higher loan to value bracket, you're going to be offered a very high interest rate. Now, I say this a bit tongue-in-cheek, fingers crossed. I would hope over the coming years interest rates might settle back down once all the COVID has disappeared, redundancies and God knows what's going to happen have all been washed out. The world will settle back down and hopefully banks will reduce interest rates again. So if you're up at that 85%, maybe 80% lending, why fix in for 5 years at a very high rate when maybe in a couple of years' time you could look to remortgage and there'll be better options available.
That's actually on our agenda, isn't it? We're talking 5 years, we're talking 2 year fixed
Absolutely.
mortgages.
Yeah, I've kind of jumped into that one there.
No, hey, do my job for me.
Sorry.
I think on those rates as well, though, just in perspective across, I think I did a remortgage on my first ever property, and it must have been 12 years ago, 11 years ago. I had 6.05% interest rate fixed for 2 years. Yeah, go back to the grey. But still, that was cheaper for a mortgage than it was to rent that same 2-bedroom house. Yeah. So it is perspective, because we've been fortunate with the Bank of England having such a low base rate for so many years now that actually, when you put it in perspective,
it is.
Yes, maybe an 85% loan to value was sub 2%, and now it is just sub 3%. But in perspective, compared to what we've seen over the decade, it's still not that bad.
No, you're correct. When I started in the industry, interest rates were that high, and me being the expert mortgage broker, I took a 5-year fixed at, I don't know, it's about 2.5% several years ago, came out of it and managed to get exactly the same deal at about 1.4.
Yeah.
So, hindsight's a wonderful thing, but times change, and we've been very spoilt with some excellent interest rates over the last 3 or 4 years. And yeah, that's changing. Again, like you say, if you compare to 5-6 years ago, we're no worse off.
No.
But people don't like the fact that base rate's low, banks are still charging a lot of money in some circumstances. So it's difficult to explain, but shouldn't put you off.
No, it
shouldn't put you off at all.
Yes, that's what I like to hear. So get in touch with Dave if none of that made a lot of sense. It didn't to me. But I'm sure you watching slightly more wise than me. But if you've got any questions about that, please do comment below. We can see them, and we'll reply straight away as well. Mike, let's come to you, because you've got something quite important to talk about, haven't we? 6 months evictions.
So there's been a lot of noise and a lot of talk recently, before COVID, about changing of eviction rules to make family rented homes more stable for those who rent them. That was something the government had as part of their agenda anyway.
Yeah.
COVID coming in meant that they accelerated the move to make standard statutory evictions to 6 months. There's no sign of that changing. There's no paperwork. There's no updates on that. So at the moment, if you do want to move your tenants out, there's a 6-month eviction period. Now, that shouldn't be something that puts landlords off renting properties, and it shouldn't be seen as a negative in the market. What it does is it stabilises the lettings market. It gives your tenants a much more stable footing of where they're living, why they're there, and everything around it. So it's actually meant that things have meant that demand has been risen in the market and the supply has been flattened. So rental prices have held up as a result because there's less rental properties coming available. So it's something that's actually meant a real positive for the market for most landlords because they've known what their tenants are doing and when to do things.
So that fear of being a landlord and thinking, right, now it's 6 months, I'm not going to get any money for 6 months, you'd have landlord insurance, I assume.
There's landlord insurance products out there, certainly, and there was a real mess through the start of COVID with whether landlord insurance products were going to pay out and if they weren't going to pay out. That seems to be ironing itself out. And realistically, the key for a landlord and for a property manager, if there is a problem with the tenant or a problem for the tenant with their landlord, is communication. It always has been, it always will be. We're fortunate to live in a relatively affluent area, and fortunate to be in an area which has been lower affected through COVID in the southeast here. So rent arrears haven't risen exponentially. Evictions haven't risen exponentially, and we haven't had that kind of problem here, so long may that continue.
Yeah, definitely. I suppose that leads into, talking of landlords and the buy to sort of let schemes. How's the market looking for that at the minute?
Well, we've seen a lot of landlords starting to do let to buy rather than buy to let, which has been a massive change. It's something we haven't seen since probably 2015, 2016, when additional stamp duty was brought in. As a result of the stamp duty holiday, it's meant that people can hold their current starter home and then take a mortgage to buy another house and rent out their original property as a means of buying on without having had a chain behind them. We've also seen an acceleration in people buying to let, which is great. And one thing that we're really keen to impress on people, if you are looking to buy to let, is look at why you're doing it. Everyone's got a different reason for a buy-to-let property. It's not always about the massive return, and it's not always about safety. It's not always about making the most money over a 10-year period with capital appreciation. It's finding out what your why is. Now, buying a bungalow down the road from you is a perfectly legitimate buy-to-let. If you're looking at moving into that property in 15 years, it's a great idea to buy it now because the chances are that house may be unaffordable to you in 15 years. Have someone else pay the mortgage for that period whilst you wait before you need to move into it. Conversely, if you've got pension money or savings in a bank account right now, it's not done anything for you for 10 years. So if you're looking for a return, look at the slightly different things. Look at mixed-use property, look at apartments, maisonettes, that kind of thing. That will return, and returns are increasing. So yields 5-6% are coming back in for the first time since 2008.
So that's good. I mean, if you stick it in an ISA, you're going to get max 3-4%. You stick it in a bank account, you're going to get 1% if that, aren't you?
Yeah, if that.
0.1, I think.
Yeah,
my
0.1. Even ISA.
I think I have to pay my bank actually.
Every quarter you get a new letter. It's dropped. Yeah.
So, property investment then essentially is what we're talking about here. It's still a.
Absolutely. It's always been a good place for your money to be, and if you think you're often buying a property which is priced at £250,000, but you're not spending £250,000, you're spending £50,000 of your money, and then you're leveraging bank money at a lower price to actually make that work for you. So you can often invest £50,000, and if the value of that property rises by £50,000 in 5 years, you've literally doubled your money, which will never happen in a bank account, not in the next 10 years.
Just play roulette to get that, wouldn't you?
Absolutely, red or black.
Pretty more risky. don't advocate that.
Putting Dave on the spot there, what are we looking at for kind of 25% down buy-to-lets? Is there good rates out there, good options?
No, absolutely. Buy-to-let market's booming, like you said. Because you've got that slightly higher deposit, banks feel fairly safe. So and again, don't quote me for rates, but you're talking probably low 2%.
That was a quote.
What's the precise rate?
I'll get that written down, please.
In the comments.
Take me away, guys. Go on. No, but they change all the time. I can't tell you what's out there today.
That's good though. That's very cheap.
Very good. If you go to a higher loan to value, lower loan to value, if you're at the 60% arena, mid 1%, which is really, really good.
Yeah.
If you do that on an interest only basis, your repayments are very, very low. It works very well for people. Really, really good.
Yeah.
Now, chaps, you have a couple of properties listed down as well, which might be regarded as Peachtree. Tell me about that.
So Peachtree is a pure investment property.
Right.
So it's a mixed use property. It's a freehold, which is the massive selling point. So it's split into 2 units. The ground floor is an office, which is currently rented. The first and second floor is a maisonette. So there's 2 income streams from the one property. Asking price at 219,000 produces you £1,340 a month rent, which is close on 7.5% return. So that's, as we were talking, you can leverage a bank's money to literally double what they're lending you on a monthly basis. So that's a really, really good idea. If you've got money in the bank, it's doing nothing for you. To buy a town centre freehold property, it will always be in the town, it will always be freehold. And they can't physically build more in Wokingham after they've finished the redevelopment. So it's really, you know, it's a real asset.
Now's the time to do it. A question for all of you actually. Can I borrow some money?
I can help you out. Chat to me after this.
I don't want to have to pay it back though.
Come on.
Look, Mike, thank you so much for that.
No
Ian,
problem.
let's come to you, shall we? We're going to talk about sort of pipeline size. We're going to be looking ahead to next year as well.
Yeah.
Where would you like to start?
Well, sales, we've done a few updates over the recent months, and it's been different for everyone to experience what's gone on with the sales market, with stamp duty, with lockdown. And much like Dave said, when we came out of lockdown, we saw a January boom, even without the stamp duty threshold, and that kind of brought a load of people to the market. We did actually see a January boom going back to the start of this year before any signs of kind of COVID causing these issues anyway. So it was clear that post-Brexit, 3.5 years of kind of that dilemma of uncertainty, the market was ready to explode. And it happened in January, and then it was pulled back, and then lockdown finished, and it happened again, and then stamp duty came in. So just picture the property market at the moment as a big wave that keeps getting stopped, that's desperate to get out. That is the facts of the property market. It is dictated by the banks, and it is dictated by what goes on in mortgage lending. But the demand is clear. People want to buy properties. We've always been a country of that, and we are underhoused in terms of the amount of volume that's being built to supply the demand. So that's the kind of the generalised summary. What we're finding as it stands at the moment is we're in the middle of October as it stands today, and we've got a clock of the stamp duty thresholds, the stamp duty tax holiday, about 24, 23 weeks, something like that. And I'm still talking to clients now that are suggesting, right, we're going to be ready in a couple of weeks, and then we're going to sell and we're going to move. And you're kind of thinking, well, by the time you're ready, you've got one shot at it, basically. If you get to the end of November and you're putting your house on the market, you've got one shot to find a buyer, find a property, get it through, and as Dave said, everything's a bit slower.
Get a mortgage. If your mortgage application fails, you've got to try a second time. That's another month.
So I think for me, where we are in trends with the property market at the moment is there is a lot of properties under offer. So a lot of houses have come on, a lot of properties are under offer. We've not actually seen that pipeline moving drastically and then churning out the other end. So if you're in the trades, for example, roofing, plumbing, any trade related stuff, I'm quite excited for what that industry is going to see over the coming 6 months, because that's all going to come out, and the first thing people are going to do is, I need that wall skimmed, I need that kitchen done, bathroom. So if you're in the trades,
Boom time.
it's going to be boom time. So get your vans ready, get your guys on board, because they are going to be hectic. But what we are seeing is with conveyancing, solicitors are under the cosh, people are still working from home, seeing the same thing with lenders and getting mortgage offers out, so everything's a bit slower. So you have to plan for the fact that between now and stamp duty, we're going to see conveyancing slower than it's been before because the backlog is huge, and we're already seeing conveyancers putting their rates up to handle volume. We're seeing mortgage advisors under pressure in terms of, you were on the phones at 7 o'clock the other morning till 8 o'clock at night. And I was working there with you, and so was Mike, so we're all busy, as we're at capacity in reality for that element of things. So the property market is an interesting one at the moment because it's like we've never seen before, but the clock is ticking, and if you want to do it and you want to take advantage of stamp duty, you've got to do it now. Now's
the time to do it. I think that's important for everybody, isn't it? We don't know what's going to happen week by week at the minute, but the confidence to carry on needs to be there, doesn't it?
Yeah. And the confidence is there with the floor. Everyone's there in the marketplace with the vendors, with the buyers. The confidence is there. I remember we put an Instagram post up probably about 4 months ago, and we were suggesting that there was a lot of extra money that had gone into the economy over lockdown. People were on furlough, the government were pumping money in, and it was like a hose pipe where it was just filling up without people being able to spend. Still, people aren't booking holidays, people are kind of reserved on buying new cars, and they're not able to go out and socialise and spend money on a Friday and Saturday like they were before. So there is money in the economy. And one chap was really negative about this mad crash that was going to happen over the next 3 weeks. If you're watching, didn't happen. And I kind of had that debate with them because there is no signs, other than when the media get involved with a snippet of a quarter's figures, to say that there is that problem. And I don't think this government is silly enough that on the 31st of March, with Help to Buy and stamp duty ending, it's just good luck and that's the end of it. There's got to be some sort of step.
It's not going to be, is it? There's a term in business, isn't it? The trend is your friend, and if it's trending in the right way, it's likely to stay that way, isn't it?
If the government stopped all the help they're giving now, like he had said, the Help to Buy scheme is getting limited to first-time buyers only. It's open to everybody at the moment, as long as you don't own a house already and moving. And with the stamp duty holiday ending, all on the same day. If that did happen, it would take such a plunge. It would have an impact on so many people. There will be, and I'm touching wood, there will be another scheme of some sort introduced. And we heard last week the sort of Help to Buy guarantee, which is a different Help to Buy scheme that will help the banks get more confidence in those higher loan to values again, the 90%, the 95% lending. They're working on a scheme like that. We saw it back in the last recession. It's going to be something similar, I would have thought.
Definitely, I think it has to be because there's limited properties, as Mike said, to rent. If the Help to Buy is pulled for second-time purchases, there is obviously the developers that are out there trying to build as much as they can, subject to the different tiers of lockdown that could come in. All it needs is a tier 3 or 4, I think it is, and all of a sudden the building sort of shuts down, and then all the people that have reserved new builds that are going to hit that stamp duty threshold that aren't going to be finished because the CML has to be kind of done by the 28th of February, all of a sudden they don't hit the stamp duty threshold. So there's things they have to bring into play to make sure that it moves as it needs to on the conveyor belt. But it's a fun time to be involved, but it's a stressful time to be involved at the same time.
Certainly for you guys, it's chop and change. I think one thing, we don't really want to get into politics here because everybody has an opinion, don't they? But one thing I think we all agree on, the government want to keep the economy going and they want people to spend. And if you are unsure, the government will do something, won't they? They're not going to leave everybody out in the lurch here. They are trying, and that leads us into 2021. Can we do a bit of stargazing here and kind of in 12 months' time, where are we going to be, Ian? Where do you think we're going to be in 12 months' time?
Is that a beach somewhere, Ian? God, that'd be nice, wouldn't it?
Malibu Beach House.
Well, March is going to be, that month in itself is going to be a very interesting month because of those deadlines that we've got. So that month is going to be a month of absolute carnage. I feel for removal van guys, that moving companies. I feel for conveyancers, mortgage advisors, and estate agents. Not that everyone will feel for us, but I do feel because that month is going to be a lot of pressure. There's going to be a lot of tears. There's going to be a lot of success and excitement, but it is going to be stressful. Moving past that, no one knows. But my gut would be in February there'll be some sort of further announcement to what comes next after stamp duty and Help to Buy, and I think that will give another kick. And talking about that wave and that water and that pipeline of things trying to get through, that demand will be there. He just needs a little bit of support and a little bit of a stabiliser almost to go, there's the confidence to carry on, as you mentioned. So I feel next year will be very different to this year, hopefully. But at the same time, I think they'll be steady. I think it'll be steady, and I think it'll be a steady climb.
I think that's the word, steady. I don't think we're going to see the massive influx of business that we've had over the last 4 to 6 months, but steady. Like you've said, plenty of demand out there. Everybody wants to move house. All the new build properties that are going on, that the government are still going to push in one way or another to help that happen. So they're not just going to let these properties sit there empty that they've been building. They're going to have to do something to help people get mortgages and help people get up on those ladders and move up to buy their houses. There'll be something, and it's I think it'll be quite attractive to a lot of people. It's got to help.
And I think as well, people's needs have changed. Mike's mentioned about whys for buy-to-lets and investors, but people's needs have changed. We've seen for the last couple of months people where they want bedrooms on the ground floor because they want to pull their parents out of care homes. So all of a sudden parents or grandparents are now living with people in residence. Even yesterday I was sat on an appointment for some clients selling a 3-bedroom in Bracknell, and their goal is to buy not a bigger property, but a property with a bigger garden to build a studio and a home office in the garden, because they now want that option to work from home. And a lot of people in the fitness industry now want to convert garages into studios to do their PT from home. So actually the needs of how people have started looking for property has completely changed. Before it used to be, I want an ensuite, I want an extra bedroom and a downstairs playroom, and that was kind of the go-to upsize from a normal 3-bed. Now people, they're not fussed about size of house, it's the flexibility of accommodation. There's actually a house that we just took on the market in Eagle Way in Jennings Park, which we kind of showed the video on. Maybe it's a good example of the type of property that's available for people. So we'll have a quick look at that.
Yeah, fantastic.
Hi everyone, it's Ian from Avocado Property, and I am here in sunny Jennings Park to show you this 4-bedroom semi-detached house. There are 3 bathrooms, 2 reception rooms, a garage to the rear with driveway parking for 2. Coming inside, let's take a look.
Anything else you'd like to add in there? Would you like to talk us through Eagle Way, Ben?
Yeah, let's talk through Eagle Way. So 4-bedroom semi, as it says in the video. It's got the bedroom space on the ground floor. It's got a sitting room on the ground floor and a shower room all on the ground floor. So that's the type of property that I think, if people are looking for parents to be at home, or if maybe, as Mike said, it's an older child that's come out of uni or can't afford to rent and they want their own downstairs space, which is what's going on at the moment. There's an engaged couple living on the ground floor that are the older child of the people that own it, and they've got their own floor effectively. So that works really well for that kind of layout. It's got parking, it's got a garage, 4 bedrooms. And it's just a perfect example of flexible accommodation, and I think that's where the demand is going to sit. It's on the market for 240,000 in Jennings Park, so if anyone's interested, obviously comment below, we'll get you booked in.
Please do, please do. Right, chaps, anything else you'd like to add? Dave?
To be honest, no, I think we've covered a hell of a lot.
I'm not getting away with being the only one to forecast, by the way. So what's going on next year?
What's going on next year, in my opinion, I would really like to think rates will settle down and the 90-95% lending is going to come back. It has to, we've said it before today. It's just got to all stabilise. There's such a big difference, like I alluded to earlier, in between the higher and lower loan to values. Everything's got to settle back down. I would probably say after Easter, it's going to sort of plateau and it will stay at whatever level that finds itself at for the foreseeable after that.
Well, we'll play this video back.
That's
See how accurate you were.
Don't do it to me. But
I think that prediction is what we want now and what we want to happen. The housing market has always been either fired by a first-time buyer or by a buy-to-let investor. From the bottom of the market, you need someone buying the smaller houses in order for the people in the smaller houses to buy the bigger houses. So whether it would be stability in buy-to-let lending or in first-time buyers, that's what's required in order to just have that consistency throughout a year.
It is.
And that's what buy-to-let buyers are looking for, is consistency, certainty in what they're buying, that they know in 5 to 10 years that things will go as they will do. The government will introduce more rules within buy-to-let, but the only people to be scared of more rules are people who break rules.
Right, yeah.
People who are looking for a short fix or looking to make more than they should be making. A good buy-to-let buyer who's looking for a 2-bedroom house in Woking and Bracknell, Ascot, is not the sort of person who should be fearful of government rules and regulations on buy-to-let, because they'll be focusing on looking after their tenants anyway.
Yeah, excellent. Well, my prediction is Leeds to win the Premier League.
We'll play that back as well.
Absolutely. Not getting off the hook there.
Not play that one back. Right, well, what a pleasure it's been, Ian and Mike from Avocado Property and Dave, Financial Advisor. Guys, thank you so much for that. I really appreciate that. It's I hope it's given people a lot of confidence as well. I know certainly I've already bought this year, so I'm quite happy now, but I was pretty nervous earlier on in the year, and wonderful advice there from you guys. Again, if you have been watching, please do comment. If you've got a question, if you want to get in touch with any of the three gentlemen, just do head over to Avocado Property and they'll point you in the right direction. Thank you very much.
Thank you.
Thanks, everyone.